How's it going, guys? This is Steve from Broke to Wealthy. Hope you've all had an excellent week. Today we are going over REITs, or real estate investment trusts. And these are excellent investments for investors who want to get into the real estate market but don't actually want to buy physical real estate. So in today's video, I'll be explaining how REITs work. We'll be taking a look at an example of a REIT, and then I'll show you 3 things that you want to look at before buying a REIT. So with that said, let's jump into the video. So REITs, how do they work? A basic example of how a REIT works. Let's say we have a company and they want to purchase a large apartment complex. So they create a business, they have a REIT, and they go to the New York Stock Exchange and they list that REIT for purchase. Myself as an investor, I purchased $10,000 worth of that REIT along with other investors, and then they take that money and they can now purchase that apartment complex. They buy it, they rent out the units, and then the monthly rent that's coming back gets paid to the investors through dividends. So it's an excellent way to get exposure to the real estate market without actually having to buy real estate. So right now I'm going to show you guys on the computer. We're going to look at one example of a REIT that is in the residential real estate market. Now you get REITs that are in medical field, you get REITs that are in residential, you get mall REITs, you get retailer REITs. So there's many different kinds of REITs, but I like the residential because people are always going to need a place to stay, and it has been steady over the years. So this example that we're looking at right now, it's called Camden. And right now, one REIT with Camden is $143. And by you buying REITs on Camden, you are getting exposure to 170 properties, and they own 58,000 apartment homes across the US. So buying into this REIT gives you access to dividend income from potentially 58,000 properties. So it's an excellent REIT to look into. Now, when you look into buy a REIT, there are 3 things you want to look at. And the first thing, you want to see the dividend history. You want to see a consistent dividend that is slowly increasing over time. And an excellent way to see the dividend history of any company, of any REIT, is to go onto the website, which is called dividend.com, and you're going to go ahead and search for your REIT on this company. So if we go here and we type in CPT, which is our ticker symbol, and then once you click on that, you're going to go to payout history, scroll all the way down, and you're going to go ahead and view all payout history, and you'll be able to see any company that pays a dividend. This website is excellent. It'll show you the dividend history, and it'll show you how much they've paid over time, whether they've stopped paying, whether they've dropped, gone up. And CPT has a solid payout history. Let's say if we go back to 2018, they're paying 77 cents per share. And if we go to today, they're now paying 94 cents per share. So the dividends are going up. It's consistent growth over time, and that is something we like to see. So next thing you want to be looking at is, just like purchasing any stock, you want to look at the financials and make sure that the company is financially sound. Now, when you're looking at shares, you're going to be looking at what's called the earnings per share, but it's a little different for REITs because we're dealing with real estate. So what's different about REITs is that you've got to be looking at FFO, funds from operations, and this is going to tell you whether the REIT is profitable or not. And what's important to know about the FFO is this is basically, when compared to debt, this will tell you whether the company, based off of their income, is able to pay back investors or if they are getting into debt. It's going to be telling you if their debt is increasing, and basically, can they pay their bills? Are they making money? So FFO, it is going to be on the income statement, and you will get a ratio when compared to debt. And if that ratio is less than 1, that's not good. That's a red flag. So if we go ahead and we look at Camden property right here, I did found that they have an FFO in the last quarter of $1.50. So for every share that they have outstanding, that is earning $1.50. So the company is profitable and they are making money. And this is something that you want to see no matter where you go and what REITs you're looking at. So the third thing you're going to be looking at, and that is the market. You want to make sure that you are studying the market that you are investing in, and location applies to both properties in the real world and these REITs, because essentially you are still having a piece of property even though you don't physically own it. So you want to make sure that the REIT you're buying into, that company is building in locations that are expanding, that are growing over time, and they're not building in cities that are dying where people are leaving. So you want to make sure you're buying into the right markets, and you also want to assess your risk based on happenings in the market. If you look at the REITs on the retailers, on the malls and the hotels, they took a much more of a hit during COVID than the residential REITs, because obviously people do need a place to stay and the rents are going to keep getting paid. So assess your risk. Do you want to invest in a new mall that's being built, or do you want to invest in a new apartment complex that's being built? You need to do your own research and you need to decide what REIT works best for you. But no matter what you do, looking at the dividend history, looking at the FFO, how much money is coming in every month, and then looking at the market, those three things right there will help you get set up to make a good purchase when it comes to a REIT. So guys, that has been today's video. I hope you got value out of it. Look into REITs. You'll see it's very interesting. I love it because it gives people the opportunity to get into real estate without having to deal with the hassles of finding tenants and having maintenance issues come up, and get that real estate exposure without putting a lot of money forward. So look into REITs if you're interested. I appreciate your time, guys. Like and subscribe. If you haven't checked out the Bitcoin ebook yet, it is now on Amazon for $2.99. Go ahead and download that. You won't be disappointed. I appreciate your support. I appreciate you looking at. Stay tuned for another video every Friday. Guys, keep your head in the game. Keep investing. Look after each other, and I'll catch you on the next video. Cheers.